Everything you need to know if you are being audited for tax fraud or errors. What do you do when you fraudulently or erroneously claim for refund or credit and get audited? Let us address first the erroneously claim for refund or credit. According to the IRS 26 U.S. Code Section 6676, the erroneous claim for refund or credit penalty applies if you submit a claim for refund or credit of income tax for an excessive amount, and a reasonable cause does not apply. This penalty provision was enacted on May 25, 2007 by the Small Business and Work Opportunity Act of 2007. How do you know you owe the penalty? Before we continue, if you're new to this channel, please subscribe and push the notification button so you can be notified when we upload new videos. Please watch this video up to the end as we advise you on what to do in case you are audited. The IRS sends you a notice or letter if you owe an erroneous claim for a refund or credit penalty. Remember that in our previous videos, we told you that the IRS will never contact you by phone or email. If you receive any such call or email, hang up or delete the email. Your notice or letter will explain the reason for the contact and give you instructions on how to handle the issue. If the letter looks suspicious, go to the IRS website and search your notice or letter. If it doesn't return a result, contact the IRS at 800-829-1040. How does the IRS calculate the penalty? In cases of an erroneous claim for refund or credit, a penalty amount is 20% of the excessive amount claimed. An excessive amount is defined as the amount of the claim for refund or credit that exceeds the amount allowable for any taxable year. Even though your refund has been held and not refunded to you while your tax return is being audited, the amount of the claim may be assessed an accuracy-related penalty if there is not a reasonable cause. The penalty shall not apply to any disallowed portion of the claim for refund or credit that is subject to any component of the accuracy-related penalty or the imposition of fraud penalty. What is the interest on the penalty? The IRS charges interest and penalties. The date from which the IRS begins to charge interest varies by the type of penalty. Interest increases the amount you owe until you pay your balance in full. How do you pay the penalty you owe? You can pay the penalty you owe to the IRS by using your debit card, credit card, digital wallet, with your bank account, or by using Pay Now. To use Pay Now, you'll need to confirm your identity before making a payment using the option. Pay in full to stop future penalties and interest from adding up. The IRS accepts full and partial payments, including payments toward a payment plan. Can you remove or reduce a penalty? The IRS may be able to remove or reduce some penalties if you acted in good faith and can show reasonable cause for why you were not able to meet your tax obligations. By law, the IRS cannot remove or reduce interest unless the penalty is removed or reduced. Can you dispute a penalty? If you disagree with the amount you owe, you may dispute the penalty. Call the IRS or write them a letter stating why we should reconsider the penalty. Sign and send your letter along with any supporting documents to the address on your notice. Have this information when you call or send your letter: the notice or letter they sent you, the penalty you want the IRS to reconsider. For each penalty, an explanation of why you think they should remove it. How can you avoid a penalty? You can avoid a penalty by filing your tax return accurately and on time by paying your tax by the due date. If you can't pay your tax by the due date, you can apply for a payment plan. If you need help with a penalty, call the phone number on your notice or letter. Now, we are going to address the second part, which is fraudulent filing. What is the danger of knowingly filing false taxes? Knowingly filing false taxes is dangerous. Tax fraud is a serious crime, and here are some of the potential consequences. Criminal charges. Under Internal Revenue Code Section 7201, any person who willfully attempts to evade or defeat taxes can be charged with a felony, with penalties including up to $100,000 in fines and $500,000 in the case of a corporation, up to 5 years in prison, and the cost of prosecution. Tax fraud not only carries higher penalties, but it also results in criminal charges. Additionally, there is no statute of limitations for tax fraud, and the Internal Revenue Service, or IRS, can come after a taxpayer years later based on fraud. Assisting someone in committing tax fraud can also result in criminal charges, such as aiding or abetting tax fraud. IRS penalties for fraud. Under the Internal Revenue Code, Section 6663, if any part of an underpayment of tax required to be shown on a return is due to fraud, there shall be added to the tax an amount equal to 75% of the portion of the underpayment which is attributable to fraud. The requirement for proving guilt in a tax crime is beyond a reasonable doubt, which is more stringent than the standard in civil cases. Consequently, if an individual is found guilty of criminal tax fraud, they might be prevented from denying the civil fraud penalty as per IRC Section 6663. Various defenses and challenges exist regarding tax fraud penalties. Oftentimes, instances of failure to file or pay taxes or omitting income from a tax return occur without any intention to deceive. The complexity of the U.S. tax system and the sometimes unintuitive nature of tax laws contribute to this confusion. Typically, individuals become aware of their errors only upon receiving a notice from the IRS regarding a tax dispute. In cases where there is no intent to defraud the government, taxpayers should not be subject to fraud penalties. Another common scenario involves one spouse engaging in tax fraud without the knowledge of the other spouse. This situation is prevalent enough that the IRS has established a provision known as innocent spouse relief to assist spouses who find themselves implicated in tax fraud penalties and charges unknowingly. It's important to remember that these are merely potential outcomes, and the actual consequences can differ based on the unique circumstances of each case. If you find yourself in a situation involving tax fraud, it's imperative to seek legal counsel. When it comes to legal matters, it's always wiser to err on the side of caution and seek guidance from professionals. Now, what do you do when your taxes are picked up for audit? If you are enjoying this video, please like, comment, and share it to help us with the YouTube algorithm so it can reach more people. Preparing for an IRS tax audit involves several steps. First, stay calm. There's no reason to panic if you have nothing to hide. The mere mention of an audit can instill fear in many people, and this fear is completely understandable considering the intimidating nature of an IRS audit. Moreover, the potential consequences and penalties one might face if an audit reveals discrepancies can be daunting. It's not uncommon for individuals to immediately wonder if they might face imprisonment upon receiving an audit notice. Some even question whether they need a tax attorney for assistance during an IRS audit. It's important to note that such extreme scenarios are exceedingly rare. Not every notice of an Internal Revenue Service or IRS tax audit suggests that you violated the law. Remember this, selection for an audit does not always suggest there's a problem. The IRS uses different methods to select for audit. Random selection and computer screening. Sometimes, returns are selected based solely on a statistical formula. The IRS compares your tax return against norms for similar returns. They develop these norms from audits of a statistically valid random sample of returns as part of the national research program the IRS conducts. Related examinations. The IRS may select your returns when they involve issues or transactions with other taxpayers, such as business partners or investors, whose returns were selected for audit. Next, an experienced auditor reviews the return. They may accept it, or if the auditor notes something questionable, they will identify the items noted and forward the return for assignment to an examination group. Understand the audit type. The IRS conducts audits either by email or through an in-person interview. An IRS audit is a review or examination of an organization's or individual's accounts and financial information to ensure information is reported correctly according to tax laws and to verify the reported amount of tax is correct. Where will the interview take place? The interview may be at an IRS office or the taxpayer's home, place of business, or accountant's office. Remember, you will be contacted initially by mail. The IRS will provide all contact information and instructions in the letter you will receive. If they conduct their audit by mail, the letter will request additional information about certain items shown on the tax return, such as income, expenses, and itemized deductions. If you have too many books or records to mail, you can request a face-to-face audit. The IRS will provide contact information and instructions in the letter you receive. Gather information. Prepare a complete response to the items the IRS is questioning. The IRS will provide you with a written request for the specific documents they want to see. The IRS accepts some electronic records that are produced by tax software. The IRS may request those instead of or in addition to other types of records. Contact your auditor to determine what they can accept. The law requires you to keep all records you used to prepare your tax return for at least 3 years from the date the tax return was filed. Seek professional help if necessary to help or represent you. It's always better to be safe than sorry when it comes to legal matters. If you're facing a situation involving a tax audit, it's crucial to seek legal advice. Other important points related to tax audit. How far back can the IRS go to audit my return? Generally, the IRS can include returns filed within the last 3 years in an audit. If they identify a substantial error, they may add additional years. They usually don't go back more than the last 6 years. The IRS tries to audit tax returns as soon as possible after they are filed. How long does an audit take? The duration of an audit can fluctuate based on several factors, including the type of audit being conducted, the complexity of the issues being investigated, the accessibility of the requested information, the scheduling availability of both parties for meetings, and whether you agree or disagree with the audit findings. What are my rights during an audit? Your rights as a taxpayer are explained in Publication 1. It explains the examination, appeal, collection, and refund processes as well. These rights include a right to professional and courteous treatment by IRS employees, a right to privacy and confidentiality about tax matters, a right to know why the IRS is asking for information, how the IRS will use it, and what will happen if the requested information is not provided, a right to representation by oneself or an authorized representative, a right to appeal disagreements, both within the IRS and before the courts. How does the IRS conclude an audit? An audit can be concluded in 3 ways. No change. An audit in which you have substantiated all of the items being reviewed results in no changes. Agreed. An audit where the IRS proposed changes and you understand and agree with the changes. Disagreed. An audit where the IRS has proposed changes and you understand but disagree with the changes. What happens when you agree with the audit findings? If you agree with the audit findings, you will be asked to sign the examination report or a similar form depending upon the type of audit conducted. If you owe money, there are several payment options available. Publication 594, the IRS collection process, explains the collection process in detail. What happens when you disagree with the audit findings? You can request a conference with an IRS manager. The IRS also offers mediation, or you can file an appeal if there is enough time remaining on the statute of limitations. In summary, to avoid any problem with the IRS, file your taxes accurately, on time, and avoid claiming credit you do not qualify for. If you are selected up for an audit, don't panic, especially if you have nothing to hide. You may be picked up randomly for an audit. The most important thing to remember is to seek professional help if necessary to help or to represent you. Thank you for watching. Please subscribe, like, comment, and share our videos to help us grow the channel and reach more people who need this type of information.